All right, guys, thank you very much for attending this UK election special webinar. I'm going to try and keep this pretty short and sweet. For those who don't know me, don't attend the regular webinars, I normally hold them on a Monday at 12:30. I'm Jasper Lawler, Senior Market Analyst here at LCG. So obviously the difficulty with these big political events, particularly when it's in your own home country, which obviously the US election, French election goes without saying, we're not in the home country of the UK. I'm sure we have some, some audience members here, perhaps from France and perhaps the US if they got up a bit early, Canada at least, where you can trade CFDs. But the difficulty is trying to separate, your political feelings about the election from, what's likely to happen in the market. So, we'll dig into that in a bit more detail, but that I think is part of the trick. I'm not going to, I think there's only so much you can say before the event. There will be, a whole different way of looking at things once we know the result and once we see the initial market reaction. That in itself is the setup for various trades. Beforehand, we can just kind of speculate about what we think makes sense to happen. If it happens as we expect, well, that's good. If it doesn't, then we can take meaning from that. So I'm assuming you've all read the risk warning at this point. So what are we going to cover in this webinar? What is a good or bad result? Again, not according to your political opinions, but just for the market or for your, for the best trading opportunities. That's not even to say what's good as far as stocks going up. Maybe stocks going down is a good result. You could argue it is because it's likely to be a more dramatic move if stocks fall after the result. What the poll's saying, I'm sure you'll probably all keep in track of the polls, but got my own take on that. Mood of the markets. This is what I hope will be one of the main things that you can take away from this webinar. What is the mood of the market leading into this? Thus, what sort of result can create what kind of reaction? So I've said here calm or panic. Obviously, if we're completely panicking and the result comes out calmly, that's a kind of the expected result comes back. Then you can get a jolt of serenity in the market. If we're very calm leading into it and there's some sort of shock, well, then the result, the movement in the market can be that much more exaggerated. Again, I'll talk about that a bit more in a second. Oh, I realised I've just copied the same thing twice here. My apologies. Obviously, the first one's meant to say election day scenarios for the pound, and then the second one's supposed to say for the UK 100 or the FTSE. Apologies for that. And then just a bit of technical analysis via the LCG trader. But I won't go too heavily into that because, again, we covered that mostly in the Monday webinar. I should mention any questions, any times, guys. Particularly in this webinar, which is a bit specialised. Please just feel free to send them either directly to me if you don't want everyone else to see, or to the group. Either way is fine. So what is a good or bad result? I've tried to keep this little summary quite simple. So if you look at, maybe if I switch things around, if you look at what the polls are showing, obviously, I don't know if you see my mouse here, but as we announced the, as Theresa May announced the election, there was a big jump in the pound. That spike in the pound caused a negative reaction in the FTSE, though it quickly recovered. Because there was expected to be such a strong majority for the Tories. That obviously kind of kept going, and then suddenly about midway through, you can see up here, the Tory lead kind of collapsed, and you could say actually really from the get-go, Corbyn has carried the Labour Party into a much more significant position in the polls. Benefit of hindsight, obviously, but I would say that this is not really very surprising. Most people vote for the same party for their entire lives. Normally the same party as their parents voted for, sometimes not. There's a slight tendency to, to vote more socialist when you're younger, and obviously, become more conservative as you're older. No one really knows why that is. But nonetheless, a 20 percentage point lead over, of the Conservatives over Labour was never very realistic. If the final result does end up more like that, then we're looking at a situation where maybe the Conservatives have over 100 seats, or maybe in the vicinity of 100 seats. That would be massive. That would be bigger than Margaret Thatcher, and so Theresa May would be hailed as the new Maggie and really could do anything she wants. I think there's a lot of debate in around Brexit and things, and I don't think her performance during this campaign has been particularly impressive. Hardly alone on that. So it seems unlikely it's going to be an above 100 situation. It's not really deserved, and with Brexit, I think there's more divided opinion even within Conservative voters, with Labour voters as well, and obviously that's why Theresa May's been up, in the northeast, northwest, not typical Conservative voters, trying to win over those Leave voters. What's more likely is that the Conservatives have a majority of less than 50. That's kind of the consensus at the moment. You could almost say, given the narrowing of the polls, that the consensus is that Theresa May not even hold on to her current majority. That would be basically a continuation of the status quo, but even if it was a bigger majority, it's not really, the whole purpose of this election supposedly was to give Theresa May a better hand in Brexit. This would not be a big ringing endorsement of her handling of Brexit if she came in with kind of the same result she started with. That would probably, I would say that would probably end up in a fairly neutral reaction in the market, because that's kind of what we're expecting. So something in the vicinity of 50. I actually, this is like personal opinions here. It's difficult to kind of trade what you exactly think is going to happen. It's more a kind of set of probabilities, but I think actually probably the polls have got it wrong in thinking things are this tight, and I actually tend to think that when push comes to shove, particularly when you're considering things like security of the country in the wake of the recent terror attacks, I think probably most people are going to vote in terms of the economy and on security, and on those both fronts. Not my opinion, but I think the consensus is that the Conservatives have it on those fronts. The NHS obviously is important for all of us, but it's not front and centre why people vote. So I actually think the Conservatives probably come out with a bigger lead than the consensus. But let's see. Hung Parliament. Now, the best case scenario in a hung parliament is that we stick with the status quo. Actually, potentially more likely is that after the sort of disastrous pairing up last time, the Lib Dems refused to pair up with the Conservatives in a coalition. So then we end up with a minority government, so worse than we've got right now, by the Tories, or if it's a really soft result, then actually maybe Labour run a minority coalition with the Lib Dems. The Lib Dems have promised not to go into coalition with either party, but I think maybe they could put in some big bargaining points, which secretly Remain voters within both parties would be quite happy with, was maybe agreeing to a second referendum. So that would be huge. And so that's a situation where the lines get a bit blurred. You have a hung parliament, but actually the prospect of a second referendum, maybe jumpstarts the pound, and people start to speculate that maybe Brexit just doesn't happen because we have a second referendum on the deal that's presented. So that may be the result of a hung parliament. Depends on the prospect of a second referendum and whether it's which coalition or minority government ends up as a result. A Labour victory, no one's calling for that. Look at the average poll difference here. It's quite sizable. Even the most favourable polls show the Conservatives with a 1 percentage point lead. So they'd actually be ceding some seats to Labour. Labour still wouldn't be the dominant party. So if you want to see this image, it's on the FT site. I've got the link there. I only grabbed this yesterday, so I don't actually think it's oh dear, trying to be clever never works out. All right, let me get back to the slide. So what's the mood of the market? Different ways to judge that, of course. What I'm looking at is volatility. So on this first thing, again, thanks to the FT, but this is over the last 6 months, the volatility of the FTSE 100. So unsurprisingly, when the election was called, got a spark of volatility. But in general, over the last 6 months, we're looking at average volatility at the moment, slightly elevated. If you look at the peaks over here, at the tail end of last year when we were looking at the US election, not a lot of volatility here in the FTSE. So what does volatility mean? It's just without going into the painful details, it's how much according to options markets, how much investors are expecting prices to move in the future. So you have implied volatility, what is kind of expected variance in standard deviation of the market in the future, and then you have just existing, it's based on past prices. So either way you swing it, volatility is quite low. And again, if you look this here, it's on the 3-year time frame. So this is the 6 month. Here's the 3-year. You can see we're right down there in terms of the bottom of the range of volatility. So we had, do you remember that we had those big sell-offs over fears over Chinese growth, kind of the Chinese stock market crash in August 2015. That was an interesting one. Then at the start of 2016, we had the big commodity crash, also a bit China related, but the market bounced back each time. So volatility spiked, stocks dropped, for example, and then recovered. And then a little pop for the US election. Obviously this was Brexit, but look at this. UK election were really right down there. What can you say against that? Well, obviously leading up to the Brexit vote, leading up to the US election, the volatility was also low. So obviously the result itself can spark some volatility, but no one really seems to be expecting it at this point. Very much the same picture for the British pound. I would say slightly raised volatility here. We're up sort of 9.71. We look at the CME, British pound volatility. That's below the highs of the year in terms of volatility. So again, kind of the average. Not really expecting market. Not expecting something huge here. So again, what do we take away from this? The mood is calm. So if something really unexpected happens, hung parliament or Labour victory basically, then I think we get some big jolts in the market because the mood has been quite calm. This, again, similar idea over the last 5 years, 4 or 5 years, kind of in the mid-range of volatility for the pound. Obviously, here was the Brexit vote. The pound collapsed, volatility spiked, but it's come really right back down. So there we have that. So what's the conclusion? Again, market not looking too fearful going into this, and I would say rightfully so, because what's happened, after each one of these big spikes of volatility, Chinese growth, commodity crash, Brexit, US election, it's been a buying opportunity. Volatility spikes, but comes right back down again afterwards. And so this, I think this was maybe UK election being called down here again. Yeah, that's what we were saying here, wasn't it? Do you see how the level of the volatility is actually on a kind of downward trend? Every time we get a spike, it spikes less. So it's almost like the dip in the market gets less each time. We get one of these political events, it's just a buy the dip opportunity. So in a way, maybe we want from a investing opportunity perspective, if you've got the nerve, wait for a shock result and buy the dip after a day or so. Obviously, I'm not offering that as advice of what to do, but it's just past. That's what's done well in these previous occasions. So that's going to be in the back of the mind of you and I and other traders going into this. So I just did this for a bit of fun. It's caused a bit of a reaction on Twitter. Just some potential scenarios here for the FTSE 100. So this is the UK 100 chart. In a way, it's just kind of outlining, I think what's good and bad for the market, but giving a bit of a price range as well, just around the round handles from the webinars. That I like the round numbers. I really think that's where the market focuses. So hung Parliament, a lot of uncertainty there. We could swing right down to 7,300 within there. Labour win. I mean, this would be a fairly dramatic move, obviously. If you look at some of the big moves that the index has had this year, this would completely eclipse it. But it would be a shock result. So this is not out of the realm of possibility, and it would still just be hitting the lows of the year. So really, in terms of price level, not really calling for anything too extreme here, but potentially another retest of the 7,100 level, were we to get a Labour victory. And again, I think in terms of, you can never really call it, no one has a crystal ball, but I suspect even were we to get down there, people would buy into that. Now here's the British pound. Again, we've been in a bit of a tight range here. If we get that Conservative win 50-seat majority, that's kind of what the market's priced in already. So I think, these reactions, I'm just talking really maybe on the Friday. In the case of the pound, it can be obviously react late Thursday, depending on how quickly we know the result. But maybe Friday into Monday, Tuesday next week. This is the kind of thing we could expect. And again, it's nothing too crazy here. Looking at a drop of say 200 pips on the pound. If we got a hung Parliament, maybe 400 pips. Extreme case scenario, should there be a Labour win. Why am I not calling it right down here? Again, that'd be a big move for 1 or 2 days. But also, it goes back to that idea that I think, and from the webinars, that I think generally the FTSE 100 and the British pound are both on a generally higher trajectory for reasons outside of British politics. Global stock markets seem to be breaking out at the moment to the top side. I know they've been trending higher for a long time, but they've been breaking out of ranges, and it's not just in the UK. Global stock markets seem to be breaking out higher. I know that seems crazy after this amount of time of strong prices, but nonetheless they are. You just got to follow what the price action's doing. Same with the British pound. I think we got heavily oversold after Brexit, but nothing materially has changed here. People are obviously worried that the UK economy is going to roll over, and that worry would be exacerbated by a Labour win, which the general market perception is that they would be a bigger risk to the economy through higher taxes and things, higher spending, maybe a bit more of a risk to the deficit than the Tories. Again, it's not like the Tories ever actually properly control the deficit. Always try and fiddle it in terms of deficit per GDP rather than bringing down the outright deficit. But still, I think we get a kind of a drop, but the overall picture is that these markets are heading higher. So that's why I think maybe even in an extreme shock scenario, it creates some big moves, but I don't know if it lasts. It'll be interesting if it does last, because it will go against the trend of those previous results that we were looking at. These spikes in volatility. If suddenly this volatility lasts, then obviously that's a market-changing environment. That tells us we may be even in for the top in the stock market. But that's why I just think that's not really on the cards just yet. So that's the bulk of what I'm looking at. I'm just going to put up the charts quickly on the platform and have a quick run through, maybe on a slightly shorter time frame, what we're looking at on the pound and the FTSE, and then we'll call it a day, not too long after that. So here's the pound, here's the daily chart. So I have this arrow on here pointing to 129 being a potential area of resistance, and so far it has been, because it's been the 20-day moving average, and we've had false breaks, 1, 2 tests and 2 false breaks. So this is a pretty reasonable assumption that actually we're struggling to get through here. The market could easily roll over from here. Again, if you're there on the Tuesday webinar, you see I just drew this trend line in, which works quite well at the moment, right? We can see this has been a strong uptrend. This breakdown here threatens this uptrend, but we're holding these support levels. We're broadly holding 128. Now, people have been buying 128 so far. Now, even though it looks like this market might be about to roll over, and I certainly think this is an opportunity around 129, I still think probably, as I said, I think the result goes maybe more in favour of the Tories than polls are expecting. Almost a repeat of the 2015 election where polls thought it'd be a hung parliament and it turned out to be a Tory win. I think probably the same thing happens again. In that case, that's going to be a positive reaction of the pound. And then we're just looking at this being a dip buying opportunity to send the pound higher as per that chart in the platform. If we dip down to the shorter time frame here, you can see that it's very difficult to pick out any kind of trend. This is actually a great environment if you're just selling highs and buying lows within a range, because we're kind of just chopping around here in the pound. No one's really, until the election results in, or until some exit polls tell us what's going on, it's very difficult to take a position with any real conviction. So difficult short-term trading, except from the perspective of, what is the range here? If we call it sort of 129.30 to 128.70, that's a sort of 60-odd pip, 50-odd pip, maybe conservative range in a slight uptrend. So if you're feeling brave enough, there's a lot of chop in around here to buy and sell. But I think if you're taking a big directional move, then that's when you're kind of eyeing up the break of this trend line. So again, if we do a quick assessment of where we are here, we've hit this trend line, we've hit the 61.8 fib. So if you're thinking that I guess there's two reasons you'd want to go short on the pound here. One is you think there's going to be a surprise result, hung parliament most likely, or you think the market's already kind of priced in a Tory victory and it comes in kind of as expected and it's a buy the rumour, sell the fact. So either of those quite feasible, and so this reaction here where we came off the trend line, came off the 61.8, on the short time frame we had a false break and we've taken out this low here, and now we dip below it, but now we're kind of retracing within it, and this is sort of like this is probably a 61.8% retracement of this little down drop here. So of course the market could push up to these highs again, but this in around here, not a bad place if you think the pound's rolling over here, and it certainly could. In terms of if you're looking at more like going along the market, there you can see we are still kind of uptrending here. Held the low, making higher lows here, making higher highs just about. And so this being the last dip, maybe we stay within these moving averages and push on higher from here. So again, 129 really being the pivot. If I jump to the UK 100, again, my take is that the trend is higher here. We've broken above this resistance around sort of 6,900 mark, which has been holding the market. We're way up there now, 7,500. It looks like the market wants to move higher. So on this daily chart, we're back at a kind of classical area of support, which is 7,500, the round number, and the 20-day moving average. Again, it could be the FTSE 100 is more tricky because we have, if there's a good result, I still expect the FTSE to, if the Tories win, I'd still expect the FTSE 100 to move higher, but I would expect the pound to move higher too. So that's a slight drag on the FTSE because of the multinationals listed in the FTSE 100. So maybe the reaction positively in the FTSE is less so than the British pound. Otherwise, we've got some layers of support down here. Should we get a little upset in the polls or something, then maybe the 7450 or indeed the 7400 are long opportunities in and around this election result. But again, I think the trend's higher. What would change that? Even I think probably 7400 for me is a bit of a cut-off in terms of how is the market doing. But this has been such a solid move higher that really the most significant support is down here at the just above the 7,000 mark, 7,100-ish. So while we're above 7,100, I'm still kind of positive on the market. We're a bit overbought at the moment, but I'd still be looking for reversals to take us higher. So stock market's a little bit tricky at the moment because there's never, unless you get periods like this where the trend doesn't really continue, you get the big dips, but the trend doesn't really accelerate. Here, in instances like this, there just never really is a pullback. Here we've had a slight pullback, so it's unusual in a strong period. So maybe we roll over more, but this is potential to get in on this trend at a lower point. So there we go. Hope that offered some sort of insight for the webinar here for the election. Good luck with trading it. I'm going to be on Twitter as much as I can be, so certainly follow me and LCG for the latest updates. We also have a LCG Twitter list, which what you should search for. So this is if you're not on Twitter, you find it a bit annoying. What you can just search in Google for is LCG Twitter Roundup, and that's just a web page with a feed of news which I compiled, which I think is some useful people to follow on Twitter. You can just have it as a saved web page. So just search LCG Twitter Roundup. And again, if you are on Twitter, certainly please give me a follow. I'll be very pleased. It's at Jasper Lawler. All right, thank you guys. Thank you very much for attending, and good luck with the webinar. Let's look with the election. Get some sleep if you are planning on staying up midnight tomorrow night. Otherwise, it should be interesting when we wake up Friday morning. All right, cheers guys. Jasper signing out.